Welcome to our channel, where we break down everything you need to know about investing in a clear, easy-to-understand way. Whether you're just starting your investment journey or looking to deepen your knowledge, you've come to the right place. Today's video is the ultimate guide to investing for beginners, and trust me, by the end of this video, you'll have a solid foundation to build upon and the confidence to start putting your money to work. Now, before we dive in, if you haven't already, make sure to hit that subscribe button and tap the bell icon so you don't miss any of our future videos. Your journey to financial freedom starts right here, and we're here to guide you every step of the way. The way forward, simplifying your investment journey. So, you're interested in getting started with investing. Maybe you've got a bit of money saved up. It might not be enough for a house, but you're thinking, what can I do with this money to help it grow? You're not alone. There are tons of investment options out there. Stocks, bonds, real estate, foreign exchange, cryptocurrency, NFTs, and more. You've probably seen YouTube ads from gurus promising to teach you how to day trade or master foreign exchange, right? But here's the thing. With all these options comes a whole lot of confusion. And it's totally normal to feel a bit overwhelmed, even scared. After all, you don't want to risk losing that hard-earned cash. That's why this video is structured in 4 simple parts, each time-stamped in the description below, so you can jump ahead if you'd like. The basics and philosophy of investing, why and how to invest in stocks and shares. Common fears and questions about investing, fast lane investing, an alternative approach to building wealth. So, let's jump right in, starting with the foundation. Part 1. The basics and philosophy of investing. Why should you even bother with investing? Well, the primary goal of investing is to grow your money over time, which helps you combat inflation and increase your financial security. Think of it like this. Imagine you have $1,000 right now. You could keep it in your bank account where inflation will slowly eat away at its value. Today, that money might buy you a decent laptop, but in a few years, as inflation rises, the same laptop could cost $200. Without investing, your money is essentially losing value. Investing, on the other hand, allows your money to grow over time. For instance, if you invest that $1,000 wisely, over time, it could turn into $2,000, $5,000, or even more, depending on how the market performs. It's like planting a seed and watching it grow into a tree, bearing fruit over the years. There are 2 primary ways that your investments can grow. Appreciation. This is when the value of what you've invested in increases over time. If you buy a house today, for example, you hope that in 10 or 20 years, that house will be worth much more. Income. With certain investments like rental properties or dividend-paying stocks, you can generate regular income. For example, if you rent out a house, you get rental income every month. Or if you own dividend-paying stocks, the company shares its profits with you. Now, there are tons of different investment options: real estate, stocks, bonds, fine art, even watches and crypto. But for simplicity's sake, we're going to focus on stocks and shares in this video because they are some of the most accessible options for beginner investors. Part 2. Why and how to invest in stocks and shares. So, why should you invest in stocks and shares? Simply put, buying stocks means you're buying ownership in a company. Let's say you buy shares of Apple. What you're doing is purchasing a tiny fraction of Apple. Now, this is important because it means you can profit in 2 main ways. Stock price appreciation. Over time, the price of the stock might increase. If you bought Apple shares for $100 each, and years later they're worth $200, you've made a profit when you sell them. Dividends. Some companies like British Telecom, BT, pay dividends. This means the company distributes a portion of its profits to shareholders. Even if the stock price doesn't increase dramatically, you're still making money just by holding onto the stock. But how do you get started? Unfortunately, you can't just go to apple.com and buy a share directly. You need to go through a broker, a platform that allows you to trade stocks. Once you've signed up for a broker's platform, you can start buying stocks and officially own a small piece of the companies you invest in. At this point, you might be thinking, how do I choose which companies to invest in? Should I put all my money in Apple or Netflix, or maybe Tesla? Here's where a lot of new investors get stuck. Picking individual stocks can feel like a high-stakes guessing game. That's why many financial experts, including Warren Buffett, recommend investing in index funds if you're just starting out. What is an index fund? An index fund is a basket of stocks that tracks a specific market index. For example, in the US, the S&P 500 is one of the most popular indexes. It includes the top 500 largest companies in the US, like Apple, Microsoft, Google, Amazon, and Tesla. By investing in an index fund like the S&P 500, you're essentially buying a small piece of all these companies at once, which helps you diversify your investment. Why is diversification important? It reduces your risk. If you only invest in one company and that company performs poorly, you could lose money. But by spreading your investment across hundreds of companies, you lower the chances of losing everything. Index funds are a favorite among financial pros and beginners alike because they're low cost, easy to understand, and historically, they've performed well over the long term. Warren Buffett himself has said that for most people, the best thing to do is to invest in a low-cost index fund like the S&P 500. So how do you actually buy into an index fund? It's simple. Use a brokerage platform like Vanguard, Charles Stanley, or Trading 212, depending on your country. These platforms make it easy to buy shares of an index fund and start investing with as little as 100. Part 3. Common fears, concerns, and questions about investing. Let's address now some common fears and questions you might have about investing, starting with the big one. What if I lose all my money? This is a natural concern. The stock market can go up and down, and it's easy to feel nervous when you see the value of your investments drop. But here's the thing. Historically, the stock market has always recovered over time. Even during major financial crises like the 2008 recession, the market bounced back, and investors who stayed patient were rewarded in the long run. One key strategy here is to stay invested for the long term. If you panic and sell when the market is down, you lock in your losses. But if you stay the course, the market will likely recover and your investments will grow again. This is why it's important to invest money you won't need in the short term. Another concern is, how much money do I need to start investing? Luckily, you don't need to be wealthy to begin. Many brokerage platforms allow you to start investing with as little as 5 to 100. Over time, as you invest more, your portfolio will grow, and the power of compound interest will kick in. Finally, a common question we get is about crypto. Should you invest in it? The answer is only if you can afford to lose that money. Crypto is highly volatile, and while some people have made huge gains, others have lost significant amounts. Treat it like gambling. Only invest money you're willing to part with. Part 4. Fast lane investing. An alternative approach to building wealth. Now, let's talk about an alternative to traditional investing. Fast lane investing. This approach focuses on using your skills and abilities to create wealth at a faster rate than traditional stock market investments. Instead of just investing in stocks, fast lane investing is all about investing in yourself or your business. For example, if you have skills that you can monetize, like coding, graphic design, or even starting your own online business, you can potentially earn a much higher return on your investment than you would from the stock market. Think about it. The stock market grows by an average of 7% a year. But if you invest in improving your skills or starting a business, your return could be much higher. If you're thinking about building wealth faster, consider investing in things like education. Take courses, attend workshops, or get certifications that can help you increase your earning potential. Your own business, whether it's a side hustle, an online business, or a full-fledged startup, building your own business can generate significant returns over time. This approach takes more effort and risk, but the rewards can be substantial. It's not for everyone. But if you're serious about achieving financial freedom faster, investing in yourself or your own business might be the way to go. Final thoughts. Start your journey today. So, there you have it, the ultimate beginner's guide to investing. Whether you decide to start with stocks and shares, or you want to take the fast lane FAQ, here are 5 FAQs extracted from the script. 1. What is the point of investing? The point of investing is to grow your money over time and protect it from inflation. By investing, your money can increase in value through appreciation or generate income, such as dividends or rental income, instead of losing purchasing power while sitting idle in a bank account. 2. How do I get started with investing in stocks and shares? To start investing in stocks and shares, you'll need to use a brokerage platform. These platforms act as middlemen, allowing you to buy shares of publicly traded companies like Apple, Microsoft, or index funds such as the S&P 500. Some popular platforms include Vanguard, Charles Stanley, or Trading 212. 3. What is an index fund, and why should I invest in it? An index fund is a basket of stocks that tracks a specific market index, like the S&P 500, which includes the top 500 companies in the US. Investing in an index fund allows you to diversify your investments across many companies, reducing risk while offering steady growth over time. 4. How much money do I need to start investing? You don't need a lot of money to start investing. Many platforms allow you to start with as little as $5 to $100, making it accessible for beginners to slowly build their investment portfolio over time. 5. What if I lose money while investing? It's natural to fear losing money in the stock market, especially during downturns. However, the stock market historically recovers over time. By staying invested for the long term, you can ride out short-term fluctuations and benefit from the market's overall growth. The key is not to panic and sell during a downturn.